subtle tweaks to improve your trading. Stay tuned, traders. We'll be right back. G'day traders, Stacey Burke from Stacey Burke Trading. It's Saturday in sunny Perth. I think we finally hit summer here. We're, I don't know, got to be in the 30s today. It's nice and hot. Last night, non-farm payrolls, but the entire week this week has offered a massive amount of trading opportunities for traders, probably no matter what type of strategy you're trading. I talked earlier in the week about getting the free course on the M&W patterns. We've seen, I'm going to say, at least 10 of those trade setups in the London and New York sessions this week amongst the different pairs. So there was plenty of opportunities for traders to participate in asymmetrical risk-reward trading setups that offered you significant risk-reward opportunities. Now, sometimes, you know, I took a couple of trades earlier in the week where I was stopped out for 10 and 12 pip losses, and that was purely a mistake on my part for being anxious and getting in too early. And I woke up the next morning a little bit mad at myself for getting in early, but again, you know, I'm a retail trader, a discretionary trader. I make mistakes every day, and the golden rule with making mistakes is make sure you're not making big ones. So as I've always said in the past, you can recover from 10 and 12 pip losses, but it's a lot harder psychologically to recover from 50 pip losses or losses where you're too heavily leveraged. Now, one of the things that I know is in the back of my mind at the moment, coming back from the States and Canada, and having spent some time with some other traders, as the golden rule is whenever you bump up size, you're going to get your butt kicked. And needless to say, there was so many great trading opportunities this week, and then heading into payrolls last night, my younger son graduated from primary school. I wasn't going to trade last night. I took a trade earlier in the Euro-Yen in the London session, which was an M pattern. It didn't really move too far. It did one measured expansion of that M pattern, but it failed to follow through. It wasn't a big trade. So I went out to enjoy my night at the beach. They had a little get-together, but I came home early enough and had been watching the Canadian and the Mexican peso pairs, the US Canadian Mexican peso pairs through the week because they had set up perfectly for a Friday reversal pattern. Now, if you haven't saw that or studied that yet, again, go get the free course. They talk about it in that free course. But the Canadian dollar had a lot of data release this week, and one of the things that I find is inherently repeats itself with the Canadian dollar is that it will often, into a large announcement, build over the week and then reverse the entire move of the week on that news release. And sure enough, in payrolls and the peso, Thursday was a reversal day. So again, we had three pushes up Monday, Tuesday, Wednesday into Thursday. It reversed on Thursday during the US session, closed back in range, and then went into a three push pattern rectangle on the Friday, which basically came back up and retested where the breakout on the M pattern on Thursday occurred. And it gave a perfect setup going into the payrolls where both the Canadian dollar and the Mexican peso gave over 100 pips on both of those trades. Now, this is probably ended up being one of my best weeks for a long time, taking out over 300 pips out of the market, purely from those M&W pattern setups. So again, I can't emphasize to you enough, sometimes little subtle tweaks in your mindset and in your approach to the market can make a massive difference. Now, one of the things that I was able to take away with me that I've really been focusing on in, you know, these simple patterns. I've talked about the stop hunting patterns before in other videos, but these are the trade setups that can offer you 5 and 10 to 1 year risk. And you need to really work on mastering those types of setups because that's where you can make significant return on your capital. Now, as you're learning, make sure that you're learning every nuance of those setups, but the key aspect of that is the asymmetry in terms of the reward. I still look at my end of day setups, but I go back to my intraday to be able to hopefully maximize the gain of that trade setup with the minimum amount of risk. The guys that I watch trade, some of them are making, multiple 5-figure incomes in a day, and some of them have had 6-figure trading days. And I'm going to suggest to you that there are people out there that are making very significant amounts of money. And even these trade setups that I'm talking to you about, like week in and week out, taking money out of the market is available to the retail trader, but you have to learn how to piggyback on what the smart money is doing. And sometimes, again, it's these subtle little tweaks. Maybe it's being a bit more patient, waiting, but I talk about the time of day, between 2 and 5 a.m. is when you're going to see that in the London Open, New York, 2 a.m. and 5 a.m. New York. And, 8:30 to 10 a.m. New York for the U.S. session at the Opens. And sometimes a little bit earlier, but again, M&Ws. Sometimes you're going to have trending days, and it's going to be measured moves. We saw that on, I believe it was Tuesday, with the pound. It broke out, it gave a stop hunt, but it consolidated and did a measured move. That was a 60 pip trade. So there are plenty of opportunities out there where you're risking 12, 13, 10 pips, and you're looking at 50, 80, 100 pip trades. So if you can get really good at those, that's where you can take the losses, no problem. Like, that's the number one thing. That is the most powerful thing you can do, is learn to cut your losses short. If you're trading on an hour or something less and you're taking more than 12 or 13 pip stop loss, I'd suggest that you have a rethink about that strategy. Unless you're taking a position into the market where you've been able to possibly identify that the higher the low of the place is in place for the session or for the day, and that you're just participating in a continuation of a trend move at that point. But subtle tweaks. Now, I think where I'm at with my trading, the subtle tweak is mentally just taking myself from a certain level of earning and being okay with, taking it to the next level. And that's, I think it's part of a mindset shift. It's one thing earning money and taking money out of the market, but it's another thing taking a lot of money out of the market. But that's a perception, because a lot of money to one person is not a lot of money to another person. And what's a small amount to one person is a lot to another. So these are little subtle things that you need to work on in your own mindset, in your own headspace. We talk about this in the 7-step daily routine for high performance traders. If you haven't done so, go to my homepage, download it, ritualize your daily routines. The other thing that I took away, the guys that I spent time with are masters of their time. They have a daily routine, they're very prepared. These guys are, and there's one woman as well, extremely well prepared going into the market. They always, all of them had if this, then that scenarios. And I was in a trade on Wednesday, the pound yen, W pattern broke out. It went to a previous breakout level from the day before, which is now resistance, 40 pips in 15 minutes. I did not take that off the table. I thought it was going to follow through. I held on to it, held on to it, held on to it. I let it come back and stop me out. Took a small amount out of the market, but that was from lack of preparation. And again, just little reminders. There's always going to be little things that the market teaches us every single trade, and there's always room for improvement no matter how big or how good you've gotten. So hopefully you got some value from today's video, traders. Keep getting better. Subtle tweaks here and there can make a massive difference in your trading, and these little daily disciplines can pay big dividends. So stay disciplined, traders. Stay focused. Get out and enjoy your weekends. Have a workout. Have some fun time, some family time, whatever it is. Come back on Monday recharged, refreshed, and prepared. Get the free course on the M&Ws. Again, I think those two patterns alone are enough to make a significant income out of the market on. Have a great trading week. Enjoy the weekend, and may the markets go with you. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.